Hello friends, how are you? My name is Atul. Welcome to my channel. So another training video. If you're new to the video, if you're new to this particular training session, if you're new to the channel, please subscribe to my channel and press the bell icon so that as and when I'll be posting new videos on training, you'll be getting the information about it. In today's video, we'll be starting off with article number 11 of URDG. Okay, so without wasting any time, let's get started. What article number 11A says: when you receive an amendment request for a guarantee which you've already issued and you are not in a position to issue that amendment, then you have to inform the instructing party or the party which approaches you without delay. Now, in what condition or under what circumstances you will not be in a position to issue the amendment whereas you have issued the original BG? Suppose the applicant or the instructing party comes to you with a request to increase the BG expiry, okay, and the limits which you have given to that entity are expiring before that. So you will not be in a position to take extended exposure because the limits which you have given to that entity would be expiring before that. Or if the amendment request is for maybe increase in the BG amount, whereas the limits which you have given to the instructing party or the applicant are already fully utilized. So in these circumstances, you will not be in a position to issue the amendment. You should inform the party immediately without delay that you will not be able to accommodate this request. The next points in this article, let's try to understand with an example. So we have a guarantee which is issued on 1st Jan 2021. The amount of the issued BG was $60,000. Expiry date was 30th November 2021. Example 1. Amendment was issued wherein the amount was reduced to 50,000. Expiry was increased to 30th December 2021. Okay. Amount is reduced, expiry is extended. Now, beneficiary presents a compliant demand for 50,000 on 30th October 2021. Now, with this demand, can you say that the amendment is accepted or not? Now, how to identify it? If the demand which is presented after the amendment of the guarantee is only satisfying with the guarantee post amendment, then only it will be deemed to be acceptance of the amendment. Now, in this case, 50,000, it is complying with the amended amount. Okay, this is also complying with the issued amount. Yes. The date on which the demand is presented, is it within the expiry of the amended BG? Yes, it is. Is it within the expiry of the original BG? Yes, it is. So you cannot say whether this amendment is accepted or rejected. You cannot determine this unless beneficiary presents another demand, and if that demand is even for $1, that means this amendment was rejected, because then that demand would only be satisfying with the original BG, not with the amended BG. Okay. Another example, BG was amended, amount was increased, expiry was decreased. Okay. Beneficiary presents a compliant demand for 70,000 on 30th July. Now, is this demand in line with the amendment? Yes, it is. Is this demand in line with the original BG? No, it's not. Now, is this within the expiry of the amended BG? Yes. Is it within the expiry of the original BG? Yes, it is. But one section is not matching with the original BG. So this means this amendment was accepted by the beneficiary. So what we are trying to say is, the moment an amendment is issued, the guarantor is bound by that amendment. Okay, if the amendment is issued for increase in BG amount, the moment that amendment is issued, guarantor is bound by that amendment. However, beneficiary has a right to accept or reject that amendment at any point in time. But if beneficiary has given its acceptance for an amendment, that means all the aspects of that amendment are accepted by the beneficiary. So beneficiary cannot give partial acceptance. Beneficiary cannot say I accept the BG for increased amount, but I don't accept the BG for the decrease in expiry date. No. If acceptance is given, that means all the amendments or all the factors which are changed in that amendment are accepted. So beneficiary either can give the acceptance or rejection of the amendment through a letter or via presentation. If beneficiary is given the acceptance of amendment or rejection of amendment to the advising bank, then the advising bank should immediately inform the guarantor. Guarantor will immediately inform the instructing party. Alright. Also, there cannot be any provision in the amendment that this amendment will be deemed to be accepted if it is not rejected within a particular time period, or this amendment will be deemed to be rejected if it is not accepted within 15 days. No. Once an amendment is issued, unless and until beneficiary gives acceptance or rejection, the guarantor will be binded by that amendment. And even if the amendment is issued with some time regulation, that time regulation part will be disregarded. Okay. Next is extent of guarantor's liability. Article 12. The guarantor is only liable to the extent of terms and conditions of the guarantee and these rules. Nothing more, nothing less. If a demand is presented which is in line with the guarantee terms and conditions, if you are not able to identify whether the demand is in line with the guarantee terms and conditions, then we will fall back to URDG articles. So the extent of guarantor's liability is only limited to the guarantee terms and conditions and these rules. These should not be inconsistent with each other, but this is the only domain within which the guarantor is supposed to act. Okay, next is variation of the guarantee amount. So under what circumstances the amount of the guarantee will vary without requesting for the consent from the beneficiary. So we'll look at it through examples. Suppose a guarantee is having a clause, the amount of the guarantee will be reduced proportionate to the amount of invoice presented by the applicant. So guarantee says the amount of the guarantee will be reduced proportionate to the amount of invoices presented by the applicant. So how this reduction will be triggered? That will be triggered by submission of or presentation of invoices by whom? Applicant, mentioning the amount. So the BG amount will be reduced basis a document called for under the guarantee, valid reduction clause. Second example, amount will be reduced proportionate to the amount transferred by the applicant to beneficiary's account. Now if this account or this account of the beneficiary or account of the applicant is held with the guarantor, so guarantor can see from credits or debits having the PG reference that the amount has been transferred from applicant account to the beneficiary's account, the BG amount will be reduced. So in this case, this is also a valid reduction clause. This reduction clause will be triggered by virtue of guarantor's own records. This reduction clause will be triggered by presentation of a document to the guarantor. Another form in which, or another aspect or another way in which reduction can take place is through an index specified in the guarantee. If the guarantee is categorically mentioned respective dates and the amounts which will be effective from that date, that will be taken as a valid reduction clause. How it will happen? Let's see that. So another way in which the reduction mechanism can work through an index specified in the guarantee. The guarantee is having this kind of a chart in it. Guarantee says guarantee amount will vary as under, and this is the reduction mechanism. Given in the guarantee. Issue date 1st Jan, this will be the amount. First reduction will happen on this date, this will be the final amount. After second reduction on 9th of March, the guarantee will be for 40,000. In this particular reduction clause, although the guarantee amount is being reduced, we will not be needing any beneficiary's consent, because when beneficiary accepted the guarantee, beneficiary accepted this index which was an integral part of the guarantee. So the reduction which happens as per this index will be a valid reduction and no consent will be required. So this is how variation in the guarantee amount will happen as per URDG by number 1 through a document, number 2 with any event which can be determinable from guarantor's own records or through an index specified in the guarantee. All right. Okay, if you have any questions related to the content or related to this particular training session, please post your questions in the comment section. Have a great day. Thank you.